We've all heard those legendary stories, right? The Bitcoin millionaires, the people who got in early. But the real question, the one we're all asking is, how do you find the next one? Is it just a roll of the dice? Well, our source material for this explainer says absolutely not. It's about strategy, and today we're going to break that strategy down.
And that quote right there is the whole idea in a nutshell. It's not about gambling or chasing hype trains on social media. It's about knowledge. It's about learning to see the patterns, to understand the tech, and to spot real value before everyone else catches on.
You can think of Bitcoin as the proof of concept. It was the one that kicked the first door open, showing the entire world that this whole decentralized digital value thing was actually possible. But its success didn't just create one single path. No, it created a whole new landscape of innovation, with countless new doors just waiting to be opened by investors who were prepared to find them.
So what does this new digital gold rush actually look like? Well, it's not about finding a Bitcoin clone. It's about spotting the patterns of real innovation. The key insight here, the thing you have to remember, is that hype always fades, but genuine utility, that's what lasts.
Okay, so how do you actually do it? How do you separate a project with real, lasting value from all the noise and the hype? Well, the source lays out this incredibly clear framework. 4 hidden indicators that can signal a project has that explosive 100x potential. Think of this as your treasure map for navigating the crypto world.
And here they are, the 4 pillars of value. You have to ask yourself these questions. 1. Is the technology powerful? And more importantly, is it actually useful? 2. Is the team transparent and credible, or are they hiding behind anonymous profiles? 3. Are the tokenomics, the coin's entire economy, built for growth? And finally, number 4, is there a strong, passionate community driving it forward? A project needs a solid yes to all 4 to even have a real shot.
Okay, let's zoom in on tokenomics for a second, because this is absolutely crucial. This is the economic blueprint of a coin. How many will ever exist? How are they given out? And what can you actually do with them? Scarcity is a massive driver of value here. It's just like with gold. Part of the reason Bitcoin is so valuable is because we know there will only ever be 21 million of them, period. So the big takeaway is always investigate a coin's supply and its utility.
So knowing the 4 pillars is one thing, but how do you actually go out and find this information? Well, this next part is all about equipping you with the right tools, the right techniques, so you can do your own research like a total pro.
And here's the core philosophy you need to adopt. Social media, it shows you the hype wave after it's already crested. But deep, fundamental research, that lets you spot the value before the wave even starts to form. In this market, the real rewards go to those who have the discipline to look past all the noise.
So this is basically your crypto detective starter kit. You've got sites like CoinGecko for all the vital stats on established projects. Then, to find those brand new, early-stage tokens, you're going to use something like DEX tools. To really understand what a project is trying to achieve, you have to read its white paper. That's non-negotiable. And finally, to really get a feel for the excitement and the sentiment, you dive into the community forums on Twitter or Discord. This combo gives you that full 360-degree view.
Look, having the right tools is great, but it's not enough if you don't have the right mindset. The source calls this slaying the dragons of fear, greed, and hype. Because honestly, the biggest risk in this market isn't always a bad project. Sometimes it's our own emotions. So that leads to the critical question, right? How do you keep your emotions from getting the best of you? How do you avoid those huge traps that so many people fall into? How do you tell the difference between a project with real, lasting potential and one that's just a flash in the pan? And this slide just lays it out perfectly. It's night and day. On the left, you've got all the classic red flags of a hype project. Anonymous teams, wild promises of guaranteed returns, no actual product to speak of. On the right, though, you have the green flags of real value. A public team, a clear use case that solves a real problem, and a community that believes in the mission, not just the price. This comparison right here is your first line of defense.
The source also gives us a really simple but incredibly powerful rule for managing risk. It's called the 2% rule. All it means is you never ever put more than 2% of your total capital into one single high-risk play. This discipline is what keeps you in the game for the long haul. It means one bad bet can't wipe you out. So how does that fit into a bigger portfolio strategy? The source suggests this 3-tier approach. You've got a solid foundation, 50% of your portfolio, in the big, stable assets like Bitcoin and Ethereum. Then 40% is dedicated to promising growth projects, your mid-caps. And that leaves just 10% for those high-risk, high-reward moonshots. That's where you do your hunting for the next 100x coin. It's all about balancing that growth potential with a secure base.
All right, for our final section, let's look to the future. If the next big thing won't be a Bitcoin clone, then where should we even be looking? Because the innovation in this space is moving at an incredible speed, opening up entirely new categories of digital assets.
And this is where things get really exciting. You have DeFi, which is basically rebuilding the entire financial system without the banks. You've got gaming and metaverse projects that are creating whole digital economies. And then you have these two newer categories that are exploding: AI tokens and this fascinating area called RWA, or real-world assets.
Now, the source really highlights this RWA trend as a potential game changer. Just imagine being able to buy a tiny fraction of an office building, or a piece of a bar of gold, or even shares in a private company, all as a digital token on the blockchain. This could be the bridge that connects the trillions of dollars in traditional finance with the new digital economy.
And this timeline? Wow. It just puts the speed of all this innovation into perspective. It took about 6 years to go from decentralized money to programmable money with Ethereum. Another 6 to get to digital ownership with NFTs. But now, we're seeing AI and real-world assets taking off at pretty much the same time. The pace of change is literally accelerating.
So, we end with this question. The source makes it crystal clear that finding the next big thing isn't about chasing hype or getting lucky, it's about recognizing the deep patterns of innovation. The tools are out there, the frameworks are out there, the next digital revolution is already happening. The only real question is, will you be prepared to recognize it?